So to be honest, we've made very few changes to our portfolio over the last couple of months. We have exited a couple of smaller positions to focus the portfolio further on our most compelling ideas. And the reason that we've had such a low level of activity, I mean, even relative to our own historically low turnover, the last sort of 3 or 4 months have been incredibly quiet in that regard, is simply because the valuation disconnect in the market has been very extreme and leads us to conclude that the exposures we have represent very, very compelling longer term prospects, and therefore we're sticking with our knitting and very happy with what we've got. We're confident we have the right ordinances to profit from a normalisation of market sentiment in due course. To be honest, the last few months have been very, very challenging for everyone on the active fund management side. I think we continue to be in a very macro-oriented market environment. We had a very good, I think, January. February was okay. March has been very challenging due to the various macro things that have been going on around the Fed, around obviously the regional banking crisis in the United States. So I think one should maybe ignore shorter term market performance and indeed share prices and really focus on the fundamental progress that companies are making. And there, in that regard, we've obviously just come through the full year reporting cycle, and we're very, very confident, as I said previously, that we own good companies that are significantly undervalued, making excellent operational progress that underpins a fantastic opportunity over the medium to longer term to realise significant value when the market is of a mind to focus more on fundamental performance and stock level valuation rather than continually worrying about macroeconomic risks. So our biggest holding is a company called Sarepta Therapeutics, and this is a company focused on the treatment of Duchenne muscular dystrophy, which is a heritable serious genetic disease that causes muscle weakness that can ultimately, unfortunately, lead to death. And it's a disease that can be addressed partially with some gene correcting drugs that help you overcome some of the mutations that underlie this disease, but by no means all of them. So a percentage of patients, say a quarter or so, can be treated to some degree. But this is one of the areas where the whole idea of gene editing, gene therapy could really make a profound difference. And there is an awful lot going on at the moment around gene therapy and gene editing, this whole complex of ideas around can you effectively correct anomalous genetic information within a human being in a way that can profoundly alter the course of a disease. And we're seeing, we've seen some drugs for small, very niche genetic diseases approved and on the market, and they've been there for a few years. But where we're getting to now, which is very, very exciting, is we're seeing the first longer term data for diseases that have been treated via alternate means historically. So, for example, hemophilia is a great one, where you can take synthetic blood clotting factors. You can have these injections every day, and you can reduce your risk of bleeding. That's a very, very expensive course of therapy. It's hundreds of thousands of dollars a year to treat somebody, but we can also address these things through gene therapy. So what's happening right now is we're beginning to see longer term data that shows whether or not these gene therapy approaches genuinely allow people to avoid traditional treatment, to lead a life free of traditional treatment, and therefore can justify the kind of high economic costs that these gene editing, gene therapy approaches might have. We're going to see, hopefully by the end of the year, the first extracellular gene editing therapy approved, and we're seeing significant progress in what we call multiplex gene editing, which is the idea of basically creating banks of cells that anyone can have when they're diagnosed with a disease that could potentially address some of those things, and also the things like soluble T cell receptors. So we're in a really exciting period of really the first blossoming of a whole new class of therapeutic modalities. So if you think about medicine in a very simple way, everything that happens in your body is a chemical process that's going wrong. And at the very base of that is some kind of either underlying problem with your genetic material or some misstep in the body's response to an external stimulus that causes you to overrun to produce something, which again is a process that has a genetic element underlying it. Everything that happens in your body is genes being switched on or switched off. And if we can start unpicking that, then it really opens up anything in theory to treatment. We're going to have to go through a cycle of innovation here, where first we do things extracellularly and we do things with gene therapy, and that will address a limited number of tissues. But over time, we can maybe move to editing in the body of specific tissues targeting specific genes, and that really is the kind of holy grail of medicine in so many ways. So for us right now is an incredibly exciting time. There's a huge amount of information to pass through and understand. And a lot of this is going to have significant ramifications for where we go from here in terms of the shape of the portfolio and potential opportunities that come along. And indeed, some of the big areas that we think about today as major diseases around things like diabetes, liver disease, kidney failure. Lots of these things can potentially be addressed by these more innovative approaches. So there's a huge amount going on at the moment that's really, really exciting. And at the moment, we're playing that really only with one stock, which is Sarepta. But as I say, depending on how things go over the course of 2023, we could see multiple other opportunities to be part of that exciting journey into a completely new way of treating the burden of human disease. Hopeful would be how I describe my outlook. I think, as hopefully has come clear from the answers to the previous questions, we remain very optimistic about continued progress in healthcare. We remain very optimistic about the underlying demand drivers of healthcare. The bit that's missing and has been missing for the last sort of 12 to 15 months is the appropriate reward for investors from the fundamental progress that's being made broadly at a scientific level, and then specifically at a company level, both across the industry and also within our own portfolio. But at the end of the day, at a certain point of time, people are going to see the opportunities come alive. They're going to see the growth continuing to come through, being translated into meaningful revenues and meaningful profits for these companies. And that's got to pique the interest of investors at some point, when they have the opportunity maybe to stop fretting about everything else that's going on in the world. I think the last month everyone thought they were reliving 2008, for example, and these are incredibly distracting and worrying things that mean that people don't have the opportunity to look at the fundamentals in the way that they should. But hopefully, as inevitably happens in all these situations, things will normalise, and when they do, we see a very, very significant opportunity to profit from those innovations that are unfolding before us right now.